We had a great question today in the analyst chat from Pierre, asking whether it's a good idea to trade during the December holidays or whether it's better to just stay out of the market during that time. So I thought it's quite an important question, especially during this time of the year. So I thought I'd do a quick video so that everybody can benefit from that answer. So what's the big deal about December anyway? Now it all comes down to liquidity as well as market volume. It's not just other professions that take off during the festive holidays. Majority of trading desks and trading firms, prop firms, etc., also close up shop during this time, and you'll see many asset managers and firms will use this time as an opportunity to close out some of their books for the year. Now, also keep in mind that compensation in the form of trading bonuses isn't calculated based on December performance on the institutional side. It's normally calculated before December, so there's also much less incentive for institutional traders to try and chase their P&L during this part of the year. Now, also keep in mind that the number of economic events will also be limited during this time. There's very few central bank meetings, for example, as we head deeper into the month. And for many desks, the last let's call it main event of the year is usually seen as the December FOMC meeting, which normally takes place the second week or the third week in December. So why is all of this important for us? Well, like I said, it's all about liquidity, which is much thinner during December, lower volume as well. And think about what thinner liquidity means. Thinner liquidity means that there's less market participants, and that means that there's less participants at the other end of the trade to take the other end of a order. So, without any meaningful participation, taking the opposite end of the market, you can often see very random and jolty volatile moves. Now, I know this is going to be a very silly analogy, but when I thought about explaining liquidity in Pierre's question for the video, I immediately thought of a specific game that goes back many years. So it's called Brick Breaker. I'm sure many of you will remember this game from many years ago. Now think of a game of liquidity as a game of Brick Breaker. During regular times of the year, as we can see in this example on the screen, where the ball has plenty of bricks to basically ram up against, sending the ball back. Think of that as the number of market participants that's there to absorb price moves in the market and trade in the opposite direction. And that creates more favorable volatility that we want to be trading in. Now, compare that with this example, where there are much fewer blocks or fewer market participants and much further apart as well. And just like we have less market participants during December, it often means that price needs to travel a lot further to find enough counter orders to create more favorable volatility in the market, which is why December can oftentimes see massive big price swings as there's really no counter orders to basically counteract those volatile price moves that we see. So because the price can either go absolutely nowhere and be very muted due to that thinner liquidity and that lower volumes, because of that, and at the same time, you can have these violent spikes in either direction. It does mean that you need to account for that possible volatility by normally widening your stops by quite a bit. And that can be a real headache if you underestimate the possibility of those volatile spikes. Now, a good thing to keep on your radar if you're attempting to trade during these types of environments is tracking the volume for various parts of the day to make sure that you're picking the best times that's best suited for trading. Now, for those of you that do have access to Zenith, you can access their FX volume heat map, which is this example on the screen, which shows you where the lowest and highest trading volumes are for particular currency pairs. And what you'll notice as you head into the month, as the activity dries up, you'll obviously see lesser and lesser of these bright red and orange colors, and you'll see more black and blues as that overall volume dries up in the market. So if you do see that happening, obviously try and schedule your trading day for the best parts during the day where you see that bigger volume. But obviously when it comes to unscheduled news, unscheduled news is exactly that. It's unscheduled. So, you also need a little bit of luck in December by hoping that the times that you choose to trade will be the times when big news crosses the wires, for you to be able to take advantage of that. The other thing to keep in mind during December is trading costs. Remember that the more liquid a market is, the better your trading costs will be in terms of spreads and commissions, etc. So sometimes, during these types of environments, during December times, the amount of price movement you need just to see your trade go break even in terms of that spread that's being spiked can be quite something. And it really does increase your risk from the get-go by entering any type of short-term positions. Also keep in mind that, if you're a trader that likes to trade various asset classes like we do, the majority of markets close down during big parts of December, which means that, even if you choose the perfect time during the day to trade, there might not be any market for you to trade on those specific days. So all in all, I'm not saying that trading in December is impossible. There's many players out there that do make big profits in December due to the possibility of those big spikes, but rather, consider the associated risks versus the associated rewards. And that means, in my personal opinion, it's often best just to stay out of the market during those times, and use it for additional research, use it for additional analysis. It's normally a time much better spent than trying to squeeze out a few additional pips during those very illiquid market conditions. So hope that helps. And if there's any other questions, as always, please don't hesitate to let us know.